BigBear.ai is scheduled to report second quarter fiscal year 2025 financial results after the stock markets close on August 11th, 2025. A lot of investors are asking if they should buy this AI stock before it reports quarterly financial results. I'll answer that question in this video. I'll also preview what to look out for from the company when they report these financial figures, the important things to watch, and I'll share with you my proprietary discounted cash flow valuation, which calculates the fair value of this stock according to what I expect the company will generate in free cash flow between today and the very, very long run. So let's take a look at this interesting, innovative artificial intelligence company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So when BigBear.ai last reported financial results, they told investors that their revenue increased by 5% to 34.8 million for Q1 of 2025 compared to 33 million in the same quarter last year. The additional revenue was related to the Department of Homeland Security contracts. Now, the company's costs were higher compared to the same time last year, and that was due to the acquisition of Pangiam, which added to the company's headcount. Also, the company prepared for incoming revenue from the government, which was delayed due to some of the government cost-cutting measures. As you recall, Elon Musk and President Donald Trump teamed up to try and cut waste out of government spending, and some of that scrutiny led to some delays for BigBear.ai receiving money from the government. Overall, the company's adjusted EBITDA came in at negative 7 million for the first quarter of 2025 compared to negative 1.6 million in the same quarter last year. Of course, the big reason for the increase I just highlighted earlier. So one of the biggest things that BigBear.ai investors need to look out for is the company's ending backlog. So as of March 31st, 2025, they had $385 million of backlog. Now, these are contracts that they have received and signed and will eventually turn into revenue as the company performs those obligations. If you don't already know how this works, when a company like BigBear.ai signs, let's say, a 10-year contract for $100 million, the company can't recognize that $100 million as revenue. They can recognize that 100 million in the backlog, and then every year they can recognize 10 million as they serve what they agreed to serve in the contract. So first it goes into backlog, and then it turns into revenue as the company performs whatever was agreed upon in that contract. So an increase in the company's ending backlog is positive for the company's revenue in the upcoming quarters and years. So you want to see this ending backlog number increase meaningfully, especially as the company since March 31st until this recording, BigBear.ai has made some notable announcements on new contracts it signed and new partners. And so you want to see this backlog increasing as evidence that the company did indeed sign contracts that resulted in an increase in their ending backlog. For the upcoming quarter, and for the year ended December 31st, 2025, the company is forecasting 170 million in revenue and adjusted EBITDA in the negative single-digit millions. The adjusted EBITDA number in the single-digit millions would be very positive because they're already negative 7 million in adjusted EBITDA. And so if they remain that level for the rest of the year, that means their adjusted EBITDA would be relatively flat between Q2 and Q4 because it's already almost up to a negative 10 million number. So this would be very positive for the company. The revenue between 160 and 180, I would lean to expect closer to 180 million. In fact, if the company doesn't upgrade their financial outlook, I would be a little bit disappointed because of the contracts and the announcements they've made since the last time they gave this forecast. At the very least, I would want to see them lift the bottom end of that guidance. So instead of saying revenue between 160 and 180, I would at least want to see them say revenue between 170 and 180. So raising the bottom end of that guidance because of what they've delivered on so far in 2025 to have confidence to raise the bottom end of that outlook. So now that I've shared with you what I would be looking for from the company, let me share with you my proprietary discounted cash flow valuation, where I value the business based on what I expect it will generate in free cash flow between today and the very, very long run. Now, I expect this business will have a present value of all the free cash flow it will generate between today and the very long run will be 850 million. Now, I do expect BigBear.ai will generate positive free cash flow by 2027. So not this year, not next year, but in 2027, I expect the company will hit an inflection point, generate positive 20 million in free cash flow, and then jump to 80 million in 2028 and jump again to 300 million in 2029. So I'm expecting rapid increases in their free cash flow. Still, the riskiness of this business is very high. It boasts a beta of 3.19. That means this stock is almost or more than 3 times as risky as investing in the S&P 500 index in terms of price movement, price volatility. And if you've been a Big Bear AI stock investor, or if you've been watching Big Bear AI stock closely, I don't need to tell you that twice, right? You've probably experienced the volatility in this stock, and maybe that's what's attracting you to this business. A lot of investors are risk-seeking investors that like that volatility because they see it as a potential where they can buy this stock. The 52-week low of this stock was $1.17, and the 52-week high was $10.36. So that's a potential 10x increase in share price just in the last year. So that potential to get rich quick is attracting a lot of investors to Big Bear AI. And in fact, I think that's what has boosted the company's share price to $7.95 as of this recording. My fair value of this stock, or what I calculated to be a fair value for this business, is $2.44. So at the current market price, it looks very overvalued to me at these valuations. So to answer the question, do I think you should be buying this stock before the company announces earnings? I would say no. This stock looks extremely overvalued. And if you are adamant about owning Big Bear AI stock, I would say I would advise to wait until after the earnings results and then digest those results and purchase the stock afterwards. Although I know you're attracted to the potential for huge increases, and that's why you would be interested in buying the stock before earnings because you want that risk. Usually investors like to avoid risk, but for Big Bear AI, I think most investors in this stock in particular are attracted to the risk, are attracted to the volatility, are attracted to the potential for a huge increase. So based on your preferences, you can make your call. But in my opinion, the stock already looks overvalued. And so if you're looking for a high risk, high reward type of investment, there are many, many other ones that I would recommend looking into and avoiding Big Bear AI stock for now. That is for now, until the company demonstrates an improvement in the tangible results to justify the valuation that it's currently trading at. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.